All right, good evening, folks. All right, let's begin. Welcome to today's session. Today's the 13th of August, we're mid-month, and we'll be looking at the US retail sales and its effect on the dollar. So we'll kind of looking at the XY for a bit before diving into the individual pairs. If you want to go through any of these pairs, we can do so. Just put the comments. Put the request in the comments or the Q&A, and then we will attend to that. Okay, my name is Sherman, and I'm an FX strategist. I specialize in technical analysis, so we'll be doing quite a bit of that today. Quick disclaimer before we begin. Trading any forms of derivatives carries significant risk. Do actually fully understand what you're doing before you start on your live accounts. If you are ready to start your live accounts right now, there is a deposit bonus going on. I'll leave the instructions here at the end of the session, so that you can get this the initial 50% deposit bonus. As always, let's look at the macros and the fundamentals of the US dollar first. And as always, we're using Gemini. We're using the 2.5 Flash. If you're on the paid version, you can actually use 2.5 Pro, but I don't think there is any difference if you're doing under the deep research. Okay, I think the key difference between these two is that there is additional reasoning behind 2.5 Pro. But if you are on the free version, you can use 2.5 Flash, which is equally good. Okay, so what you're gonna get out of this free report by Gemini is the macro or fundamentals of US retail sales. And at the end of it, you can actually generate this cool infographic on the right-hand side. Okay, so this is going to go through what what is being generated here. Okay, this is a little bit so that we can see this better. Okay, so US retail sales, as we all know, it's a indicator for measuring your economy, especially in terms of goods and services purchased. Okay, it usually gives us early signals to whether or not the economy is expanding, contracting, or stagnating. Okay, so consumer spending accounts for 70% of US GDP. So domestic spending within the US makes up a very big portion of the US GDP. Okay, so two paths that we can actually take if it is stronger than expected, or the binary outcome will be weaker than expected. If it's stronger than expected, we will be looking at a signal of a more robust economy, and that will mean that there might be inflation fears, right? Because people are spending more, cost of goods and services will go up. The Federal Reserve may raise or hold interest rates for the next two upcoming FOMC in September, and the next one is in November. Okay, and that will lead us to a stronger US dollar. If it's weaker than expected, people are spending lesser on goods and services, it might signal a slowing down in the economy that will ease your inflation fears, and Federal Reserve may cut interest rates to stimulate the economy, to stimulate spending, and that will lead to a weaker US dollar. And this is the news that's coming out later. Okay, for those of you who are looking to track your calendar, there is a calendar on the Vantage website. I'm just going to the Vantage website. At the top, you will be able to see this tab called Market Analysis, and click on your economic calendar. It brings up all the next 2 weeks worth of events. And what we'll be interested in is your high importance. Anything that's of high importance, they call it the red folder events. Okay. And then today is August 14th. Okay, this will be to based upon my local time. Okay, And if you scroll down, all the way down to the bottom, okay, you'll see at 8:30, there is PPI, and then initial jobless claims. Okay, that is for tomorrow. And then on Friday, okay, you can see August 15th, on Friday, your retail sales will be coming out at 8:30 Singapore time. So this Friday, these are the more important ones. The consensus, if you scroll all the way to the top, okay, it's actual, forecast, and previous. So your previous retail sales month-on-month was 0.6, and the expected looks like it's going to drop from 0.6 to 0.4%. Okay, again, this consensus is based upon, I think, 20 institutions, the analysts from 20 institutions, and this will be the median forecast for retail sales month-on-month. Even on year, you'll see a drop from 3.9% to a consensus of 3.5%. Okay, so based on that, these are human intelligence. So analysts came up with these numbers, right? If bigger than expected sales, you see a signal of a slowing economy. Is inflation fears, you might see a cut interest rates and then a weaker US dollar. And you can kind of see that in euro dollar and pound dollar from yesterday's CPI news. Okay, so how do we see what's the probability that the Federal Reserve may cut rates? We want to go to the Fed Watch tool. You go under CME group, under data, and then Fed Watch tool. Okay, where's the Fed Watch tool? Or is it under markets? That services. It's used to be under data. Or you can just directly search Fed Watch. Okay. Interest rates, under interest rates. Okay. Under interest rates, and then you should have tools. And then under tools, you have CME Fed Watch. Okay. So what this tool does, it's that it basically gives us this table here, and you can filter by the next. So September is the next one, October is the second last, and December will be the last FOMC meeting. Okay, so 98% is predicting a 25 basis point cut. Okay, and that was up from 1 month ago at 57.4%. So 400 to 425 by September, and then on in October, another expectation increase from 34% to 67.1% for a 25 basis point cut. Okay, so overall, this is coming true, bigger than expected sales data coming in. Okay, so retail sales kind of dipped in May, but then we see a healthy growth in June and July. Consumer confidence, very high, above 97. So essentially, it gives this path a stronger weightage. Okay, so inflation versus Fed policy, usually in times like this, when you see a continued decrease in inflation at its peak, the percentage at its peak of your core inflation was around 5.5%. Okay, and then in May, 2.7%, Fed target, it's 2%. This is the healthy core inflation that the Federal Reserve is looking at. But right now we're at 2.7%. Still quite a distance from 2%, but I think this basically is much healthier than where we were like in 2022. Okay. So another key thing is labor market, right? If labor market is strong, it means that people still have their jobs, okay? And then that would mean that consumer demand will continue to increase. And if that happens, inflation will set in. And in that case, if Federal Reserve were to decrease interest rates, that will cause inflation to spiral even or worsen. So essentially, if the Federal Reserve do not cut rates, which is contradictory to this path here, you will see that the US dollar will strengthen when the retail sales is being announced. Okay, scenario one, that's the key thing that everyone's hoping for, a soft landing. So soft landing includes, right, retail sales being moderate. That means there's sufficient demand for goods and services. However, inflation decreases down to 2% and allow the Federal Reserve to slowly cut rates to stimulate growth again in the economy. Now, in the second case, is that there's a plummeting retail sales. Okay, labor market is weak, taken over by AI. Okay, then the Federal Reserve is forced to cut rates, and that will lead to increased borrowing. And when increased borrowing happens, then your US dollar will fall or weaken significantly. Okay, and then in the third scenario, retail sales is strong, but instead of having a steady or moderate inflation, you have persistent inflation. The Federal Reserve will continue to maintain their rates at a high, and then this could give more strength to the dollar. But down the road, you see that imports are getting more and more expensive, and it causes a hard landing later. Okay, so the cool thing with the new model for Gemini is that there are follow-up questions or follow-up scenarios that Gemini will prompt you, so you can actually do a lot of exploration through this tool itself to understand a little bit more about the effect of retail sales on the US dollar. All right, so with that, let's look at the charts. Let's look at DXY first before we look at any of the other currencies. Okay, in Vantage, it's called USDX. Okay, the dollar index is basically an index comparing the US dollars with a bunch of currencies, and the biggest currency that forms this basket is the euro dollar. Okay, the US dollar has an inverse relationship with euro dollar. So if you want to trade the dollar index, but your broker do not offer the dollar index, or if you think that there might be lesser liquidity in the dollar index, you will do the inverse trade on euro dollar. Okay. So of course, on Vantage, you are able to do that. So you can actually trade USDX directly with Vantage. Okay, as always, we will use the pivot points. Okay, the one that we're using is called Wayne's Pivot. And this other tool that, this other indicator that I'm using, it's called the visible range volume profile. So you can just leave it there to kind of highlight where are the key levels to take note of when you're trading a particular currency. Okay. Okay, so this is the weekly profile. Let's look at the monthly profile. Okay, so this is the monthly profile. Okay, off the bat, you'll see two key things. You'll see that prices broke below S2 here in the month of April. So you can basically highlight this entire area as a resistance. Okay, for those of you who are new, whenever price tend to oscillate between R2 and S2, which represents your second resistance and your second support, as and when it breaks below S2 or break above R2, that's where it becomes a flip zone. Okay, so this entire area here is considered expensive to buy right now. Okay, previously it was that support, and was cheap to buy, but as it breaks below, now it is expensive to buy. Okay, so as price comes up, we can expect some sort of rejection. And what we'll be looking at, two key things, is a break out of this channel here. Okay, so whenever there's a channel and we break out of it, we tend to be looking at a move along this channel downwards. Okay, so this is kind of like a long-term trend on the monthly, but we also want to be cognizant of this move here. So we really want to sell and follow along this line once we break below this level and we test. Okay, so what will be the catalyst? It might be tonight's news, PPI, or tomorrow's news, PPI and retail news on Friday. So today might be a mild day for the dollar, okay, in preparation for the next two events, upcoming events. Okay, so this is kind of like the overall from the picture here, from this setup here. What we're looking for is a break below this ascending channel, and then we'll be looking for that retest before heading down lower. Okay, when will we be bullish? We will be bullish if this last selling zone has been broken. That means we need to see it break above, retest, and then this will be the ultimate target again at 100. Okay, going on the low time frame, you can see how we are in that zone again. This is drawn by me. It's not accurate, okay? But potentially we're looking at this as a support, okay? But if it falls below this level, it cuts through this level, then our bearish setup will be in play and we'll be looking for the retest. So do something like this, retest. We're looking at something, okay? So if this week's low is going to break the S2 of this week's pivot, okay, this is S2 here. Let me just zoom in a little bit. Okay, this is going to give us a retracement early next week and then a hard sell-off again by the end of next week. Okay, so using your volume profile, you'll be able to find key areas, key reaction areas. Okay, if you go to the settings, okay, the up areas, that means areas whenever there's a tick up, okay, is highlighted in yellow. Whenever there is an area with a tick down, okay, it's highlighted in red, okay? So areas of resistance, you can see a lot of selling yesterday or this afternoon, sell-off of the dollar, continuation from CPI news on Tuesday, okay? And these are the key resistance that we're looking at. This will be one area. Next area will be here. And you see that it overrides the red volume bars here. So those are the key levels that we will be watching. Okay. Okay. If you zoom out a little bit more, bulk of the buyers are at this level, So if you were to be a little bit more accurate in terms of the lineup, S2 is going to be this key area where a lot of buyers come in. So you can expect the buyers to defend this level again. And then as it comes into this area of a lot of selling will take place. And then we'll probably be looking to target the low of July. Okay. Am I sharing my screen on Zoom? Yeah, okay. So again, why are we having a bias on the sell side towards the downside? Because the research, okay, again, this is a 5 minutes research, but it does make sense. Okay, so weaker than expected, and we compared that with our calendar. So expected based on analysts' reports, it's going to be weaker than expected. Okay, based on AI, if weaker than expected sales will lead to a weakening of the US dollar based on these key factors here. And therefore, as we look at the US dollar, we are looking for sell setups using technical analysis. Okay, but we are not going to sell right now because there isn't a failure of buyers. Okay, once it breaks below this low, or if even better, if it goes below this previous low, we will know where at what level were the buyers coming in and they failed. And then we're going to look at the retest of that level before selling off again. Okay. So just now I was talking about the inverse relationship DXY has with your euro dollar. So you want to look at euro dollar. Okay. So same thing, you're going to have the inverse relationship. That means it's for the dollar index is hitting a support, right? An uptrend support. For your euro dollar, you're hitting a downtrend resistance, okay? So what we want to do is the inverse of what we saw in the US dollar. So we want to do something like this, retest, okay? This is the target, and this is the monthly target, okay? Where did we start the month? This is the monthly target. If you are bullish, where is the entry? The entry is M2 pivot, just above M2, below pivot, and right from the start of the month, okay? You usually start off the month at the M2 level if your last day, the last day of last month, you made the monthly low. Okay, so 31st of July, we ended the entire month of July at the lowest possible price for euro dollar. And therefore, as you start the month of August, you'll be starting perfectly at M2. If we're looking for a continuation to the downside, we are looking for a retracement up to M3, the best price to sell, and then hit down to M1, S2. Okay, this is kind of like the setup. Usually, if this is the overall trend is a bullish trend, okay, again, we closed R2M for above, prices closed above June's R2. This was a support, didn't make the higher high, and therefore it cuts right through. And then right now we see it break above M3. M3 is going to act as that support. And then right now we're going to move up and then retest back at R1 again. And again, you can see all of these red lines here, okay, at your key supports. So you can use these key areas to map out your entries. Okay, usually when we see a gap like this is going to be the support. So we'll probably wait for another leg down deep into this area and see if there's a bounce up. Okay, the first candle of the London Open, immediately any orders that we're looking for high liquidity in the first hour of London, okay, immediately once all of these positions were, once we entered the London session, right, the obvious move was to the upside, so a lot of buying. So we can basically look at this level here as a safe, this is a hard low, okay, so we tend to not, you do not need to be too afraid of There's a lot of buyers coming in. So basically we're just plotting 1:3 from there. Okay, a very straightforward entry from this area. Okay. You may say, take a discount, look at this high here, New York high. We're going to use that as a rebound. That works too. Okay, what is the significance of this point here? Is probably the range that we saw yesterday from the pivot. So I'm going to readjust that to R2. Okay, and then your risk to reward is about 1:3.32. Okay, failing this upward trend, okay, you know that your stops will potentially safely get you out for this move down. Okay, so this is probably the best bet for a euro dollar buy. Okay, quite a bit of volume here as well, so you probably see a lot of support coming into this level here. Okay, so if it's not a 25 basis point, but a 50 basis point cut, okay, Federal Reserve cut interest rates, weaker US dollar. This would mean that euro dollar is going to shoot up. So macro-wise, we are bullish or we're bearish on the dollar. Technical-wise, we are also bearish on the dollar. So both of that lines up. All right, cool. Let's go ahead and just do silver for the last one, and then we'll call it a day. Okay, so clearly silver broke out of this R2M4. This is going to be our support. So we're just going to look for entries here. Don't really need to look at it at the higher time frames because silver has been kind of bullish since we talked about this many moons back, but this was the range. Once it breaks out, okay, right now it's on the upward move, which you can date back to within that range that we saw, and then we're kind of moving up higher. Okay, you might do this. Okay, double top, come back for support. Again, breaking out of this high here. This is going to be a very good support. Okay, very good support around here. And you can compare that with your volume. And you can see about all the volume is here. Okay, but you can see a lot of red volume here as well. So if it does in fact, okay, for us to actually be bullish here, again, this is the lower time frame, I would probably expect price to want to make back to this all-time high again, and then comes back down here for a retest. This will take us all the way into September. Okay. This is backed by a lot of buyers at this point here. Again, at this point here. So, and we did not hit this target here. So very rare for us to actually see sell-offs coming down at this level. So it can only be a bullish movement up from the seller's weakness, which is here. Okay. Coming into this area here, you are seeing a lot of sellers looking at this high here, and they're looking to sell. this was the cascading stop losses that were triggered, and it pushes it up higher. So if price do come back down into this level, you will not find any more sellers looking to sell here. Okay, there won't be anyone to trigger your sell stops here. Okay. And if there is anyone to trigger the sell stops, then the direction can only be the opposing side. Okay, cool. 8:31. So that's all I have for your DXY. Bitcoin is at 120,000. Okay. And also your equities all-time high again. Right, this was the all-time high. Breakout of the all-time high. Okay, yeah. So where will we be looking at? Okay. We want to see if this sweeps the London high. If it sweeps the London high, the high probability buy will be somewhere around here. Okay, 2370. Okay, so if we do a sweep, then we can potentially look for buys in this area. Otherwise, if it doesn't sweep, it sweeps this low, comes down, sweep, then we're probably trying to aim for a higher target. Right, cool. Right, so that's all I have for you guys today. If you're interested in our previous webinars, you can find them at vantagemarkets.com/academy/live. And if you have any questions, you feel free to email support@vantagemarkets.com. Cool. If there is nothing else, then that will be it for today. All the best to training the upcoming session. And I'll see you guys again in the next webinar.